All right, so maybe we start with a short round of introductions while the rest of our guests are joining. So hello and welcome everyone. Welcome to the webinar ESG Ratings AI Empowered. A brief introduction from my side. Hi, I'm Marcel. I'm at Briink a couple of months ago, joined, and before I've been into consulting, strategy and ESG consulting for over 15 years. And I have two lovely speakers and co-hosts with me together here in this webinar. And maybe Julia and Katinka briefly introduce herself to our audience, and then we can kick it off.
Hi, everybody. Thank you, Marcel. Yes, I work at EthiFinance. That is a medium-sized European ESG rating agency. And I've been within that company for 2.5 years and roughly 15 years in ESG ratings and several other firms as well before that. And yeah, close to 25 years or so in ESG and sustainability.
I'm Katinka. I am part of Kirchhoff Consult, and I joined Kirchhoff Consult last year. And before that, I did sustainable finance and law. Like I'm a lawyer by background, and I'm, let's say, inexperienced, the junior in all of us three, having not as many years as on sustainability.
Yeah, but never mind, Katinka. I think that's not the relevant point. Okay, cool. But thanks, everyone. And yeah, I'm happy to have this round. Today, we have a packed program. Let me, click the next slide. Yes, the agenda is quite packed. We will start with EthiFinance and a talk by Julia, continue with Katinka from Kirchhoff, and then I will bring some more perspective of how AI can empower ESG ratings. In the end, we will have a joint Q&A session and discussion. So during all of our talks, please find below in your Zoom window, there's a Q&A section. And if you open that section, you can give us post your questions to us. And you can also read all the questions of all others, and you can also upvote. So there's a like button. So whenever you like a question or you have the same question, just upvote the other questions or just post your own question as you like. So please use the time of our talks to push all your questions into there, and then we will pick them up later on in the Q&A session. So that's the setup. And for the start, Julia, I will hand over to you. And yeah, please tell me when I should click the next slides, but now it's all yours.
Thank you once again, Marcel. So yes, let's get this started. I'll give you a relatively brief overview of what ESG ratings are, also what we do at EthiFinance, and some additional insights. So it's going to be pretty dense, so don't hesitate to ask additional questions if I go too quickly on some of the aspects. So on our next slide, just a very brief introduction to EthiFinance. So we're one of the older ladies in ESG rating. We've been around for over 20 years now. And we're an older lady, but it feels like startup because that field of ESG ratings is moving continuously and keeps on changing. So yeah, we're about 130 experts in finance and ESG. So we're an ESG rating firm, but also a credit rating firm. And we're present around Europe in 3 countries, Spain, France, and Germany. On the next slide, I've just pulled together the different data sets that we offer to investors and financial institutions. It's pretty classical. We offer ESG ratings, but also the underlying raw data. We have controversy research, SFDR and PAI data, SDG contribution research, EU taxonomy alignment, business activity screening, on controversial business activities, and a climate transition assessment, and obviously, other climate data as well that are part of the ESG raw data. So we're a European company, as I said. So for the moment, for most of our data sets, we have a European coverage. We're also specialized more in the small and mid-cap space. But we're, aiming to increase our coverage as well. So for the climate transition assessment, which is the newest data set, we're already covering a global data set. So that's all on EthiFinance. And on the next two slides, this is a little mini course, ESG ratings for dummies, because I wasn't sure who was going to be among the audience. So very sorry if this is too basic, but just as a reminder, the role of ESG rating providers is really, at the center of the sustainable finance and responsible investment area to collect data and really understand the sustainability performance of companies and other issuers, institutional issuers, and to deliver that data to the investment and financial world, right? So very important, because in order to make informed investment decisions, investors need to know, all kinds of things on companies when it comes to sustainability performance. And basically, with all of those different data sets that I showed on the previous slide, investors get a lot of information on how companies are performing, what they're doing well, how they've been improving their performance and reducing their environmental footprint, and so on and so on. So this is, a very, very important role. Also companies themselves are often, asking for ESG ratings. So we also deliver solicited ESG ratings to corporates, because they use that information also to track their internal sustainability performance. So that's basically the role of ESG ratings in a nutshell. On the next slide, I just wanted to show you how it actually works. How do we come to an ESG rating? So first of all, of course, there's the methodology definition. So I think you probably, hopefully, all know that, or have heard about, that discussion on the differences in outcome of ESG ratings. So, one company can get a very good grade from one ESG rating provider and a less good score from another one. This is really because there is no standard actually out there on how ESG ratings should work. So every ESG rating provider has their own methodology and chooses their different hypotheses for how to come to the actual conclusion. So, but what is pretty common to most ESG rating providers is the fact that, we use sustainability standards, norms, regulations, reporting frameworks, such as the ESRS underlying the CSRD. Sorry for the alphabet soup. I'm just assuming that everybody knows what I'm talking about. The UN Global Compact, OECD guidelines, SDGs, so Sustainable Development Goals, and so on and so on. GRI, the Global Reporting Initiative. So these are pretty common to most ESG rating firms globally. But then, the actual definition of the rating methodology is different from one firm to another. Obviously, the materiality definition. So is it double materiality, single materiality, more financial risk focused, or more, stakeholder focused, or what you call outside in, how the company is itself impacted by, for example, ESG regulation, environmental regulation, and so on, but also how it influences external stakeholders, for example. So that's the whole materiality definition is very important. And then obviously the single assessed factors, indicators, weights, and the scoring models, rating scales, that can all be very different from one ESG rating provider to another. Next step is the data collection and the production of a pool of raw data, basically. So we also have very different, approaches from one provider to the next here, but I'll come back to that a bit later. And then based on the raw data and the scoring models, we come to the production of scores on an indicator level, on a theme level, and on the overall ESG level. And then some ESG rating providers produce additional qualitative analysis. That's what we do at EthiFinance. We try to explain the scores and the overall assessment of companies' ESG performance to our clients, and we deliver additional analysis. So that's basically an overall short snapshot of how it works. On the next slide, I just wanted to shed a little light on how we at EthiFinance use AI for our ESG ratings, and Briink will present more in detail their approach and their tools. But what we do, so on those 5 steps that I've just described, at 2 of these steps we use AI for now. So we've been experimenting for the last 2 years, and obviously that's an area that moves very, very fast, super dynamic, and we're getting better and better results over time. So first of all, on the data collection side and the production of our pool of raw data, so there are 3 areas where we use either we ourselves or our partner Sustainometric use AI tools. So, the automated import of company publications is one area. Another one is the extraction of data and information from these PDF reports. And then third is our controversy analysis, where we also have a partner that uses AI, but we internally also use AI, and with Copilot we summarize our controversy analysis and so on and so on. And obviously Briink is one of our partners, so we use mostly Briink for our private ESG ratings that I haven't really mentioned here, but we also produce, ESG assessments, due diligence, and so on for private equity firms, and help them understand the ESG performance of their underlying or of their invested companies. And then the second area where we use AI, and here we use OpenAI, is that we deliver to our clients in our ESG rating reports first a summary of key corporate information. So this is something where we used to, buy external data, which was very, very expensive. Now we can we extract it directly from the sphere out there with AI tools. And then, but what is, much more interesting for our clients is the actual analysis, what I mentioned earlier, the qualitative analysis of how a company performs, what the trends are, how it's been improving, reducing their greenhouse gas emissions, for example. So basically, AI helps us to analyze our ESG rating reports, the 140 indicators that we and all the qualitative comments of our analysts. So that's a pretty powerful tool right for now, and we've been delivering short analysis to our clients that are AI based and that our clients are really happy about. So that's all on AI, and I have one last slide just to inform you, for those who aren't aware, but there is an EU regulation for ESG rating providers upcoming that has already been decided. ESMA, we will be ESMA supervised, ESMA has published their regulatory technical standards, so we know what's coming. In July 2026, we will have to be compliant with this regulation. And, I can't go more into detail because we don't have a lot of time, but just for you to know that we will have to be much more transparent. Well, we already are at EthiFinance, but not everybody is, on methodologies, on data sources, on rating assumptions, etc., etc. So this is to fight against, the black box that we've sometimes been hearing about, that ESG ratings are black boxes. No one understands how we get to our conclusions. We will also have to manage our conflict of interest, very strictly. Once again, will be ESMA supervised, just like the credit rating agencies out there. We will have to segregate some of our activities. For example, if we deliver consulting to investors or financial institutions, or credit rating, index business. Well, index business is a bit apart, but asset management, audit, and so on needs to be legally separated from ESG ratings. And there are some other, rules. I won't go into detail because I've seen the time flying, and I want the other speakers here to have enough time. But if you have any questions, don't hesitate to put them in the chat box. And yeah, I hope that was all clear, and happy to read your questions later.
Yeah, thank you. Thank you, Julia, so much for all of this. And for all of you watching this, we will provide the slides after the webinar, so there's no need to do any screenshots or so. You will get all the slides and apparently also a recording. So just as a short intro, and thank you again, Julia. We will discuss all of your insights later on in the Q&A session. And now I will hand over to Katinka and your thoughts. Here you go.
Thank you so much. And thank you, Julia. This was a great start, actually, on which I can build up. So I would like to talk about how to prepare ESG data that enhances ratings and boosts investors' trust. And you can go to the next slide, Marcel. To start off, as already mentioned, I'm part of Kirchhoff Consult, and Kirchhoff Consult is a consulting, creative, and digital agency with an editorial office. So basically, we're all under one roof in Hamburg, and we create annual and sustainability reports. We support companies during IPOs and in the area of investor relations, and we also provide ESG and sustainability consulting. So I'm from the ESG and sustainability consulting team, and our team has 3 key areas that we focus on, or services that we focus on. One is the regulatory and the reporting part. So we support companies in issuing sustainability reports and statements. Other one is the climate and strategy side. So I think a very common aspect there is the carbon footprint, so like the corporate carbon footprint, to support companies in calculating that. And the last part, and which is also related to this, is the ESG rating and risk management side. So supporting companies during their ESG rating journey. And I will, in this presentation, I will talk about 2 topics. And Marcel, if you go to the next slide. The first one is ESG and sustainability. So what is it? What is the difference between ESG and sustainability, and what is the effect in the financial world, just to give you a small introduction. And then I will move on to talk about how you can use that information for your company. So on the next slide, I have shown you or provided a little graphic, because you have ESG and sustainability, and the words are being used very synonymously in the market. But when you look at them, there's actually a slight difference in the fields and the detail. And ESG is the much more disclosure-focused aspect. So it encompasses the regulatory aspects, the ratings, the data, and you can actually call it kind of the accounting system of sustainability. And then on the other hand, the sustainability is a much broader term. So the basis comes from the data collection, from the ESG aspect, but then your sustainability uses it to create a strategy and a story. So with sustainabilities, companies can build and position their brand and their narrative on the market. So in the end, sustainability is the value creation and the storytelling dimension. But they do influence each other, and together they do the value creation. And sustainability builds on ESG and the data, and then only sustainability. So the narrative in the story actually makes ESG the important aspect that it is today. And this sustainability narrative, on the next slide, you can see that in the past years, it influenced the financial market more and more. And alone, these three headlines, they're all from 2025. And to just pick one out, so the first one, which is about PFZW, and it's a Dutch pension fund, and they pulled around $30 billion from BlackRock and LGIM, and this just based on sustainability criteria, which BlackRock and LGIM were not able to fulfill. And I think this shows very well that it has, the importance of it has increased a lot in the capital market in the recent years. And on the next slide, I also have brought you just a couple of numbers. So the amount of funds with sustainability criteria has increased significantly in the last years. So it was 6% in 2019 from funds, and at the end of 2023, 19% of funds had sustainability criteria. And when you look at the graph, the fund size compared to conventional funds has increased for sustainable funds much more. And this is just one aspect which shows that sustainability is a factor and that the trend is in increased investment in instruments with a sustainability factor, which means that ESG data has increased in its importance, which brings me to the second part of my presentation, which is how you can use this information for your company. And when you think about this question, the first aspect is, what do stakeholders actually want to see? And in the past years, there's been a very big increase in the amount of ESG data that a company had to issue. So the ESRS, like the regulatory landscape by itself, and the ESRS in specific, it has increased the abundance of data a lot. And on top of it, also the ratings and generally like the financial market, as Julia had already pointed out, they rely on this financial data, this ESG data. And this led to what we call an ESG data paradox. So you have a lot of ESG data out there, but the usability of it is not always given. So it's the typical aspect of, or the typical comparison between quantity and quality. So more is not always better. Now, I would like to take a more detailed look together with you at rating agencies and at financial stakeholders, because those two are very important stakeholders when it comes to ESG data. And they're especially important because they're stakeholders who truly rely on ESG data. So what I did is that I thought a little bit about, or would like to show you a little bit what they look into when they look at data and how that could help you. So rating agencies, they all have their own methodology. However, they all have in common that they require data to be consistent and complete. So basically, they reward transparency. They all keep in the typical ESG aspects. And I brought you some most common pitfalls to make a little bit clear what I mean when I say that they reward transparency. So one aspect is that the scopes of the data that companies disclose often is not very clear. To give you an example, when you have a human rights policy and you say that you have a human rights policy, but you don't disclose which companies that applies to in your scope of companies, then it's very hard to identify whether the maybe very good intentions that you've set actually cover all of the relevant companies. And the second part that is also an important aspect is the lack of alignment with recognized frameworks, because recognized frameworks, they create comparability and thereby transparency for rating agencies. So in the end, it's key to understand the details of the methodology of rating agencies and use that to your advantage by focusing on your disclosure on those aspects. And the financial stakeholders, in the end, they ask for something very similar. So it's important for them that they're looking for information on ESG risk and compliance. So it's also a lot about transparency. And the risks for clients, they will increase in the future, meaning today we already see that insurances, they use climate scenarios to assess the risks of assets before allowing insuring those. So it's really important for financial stakeholders to be able to collect a lot of information on their clients and or on the companies that they potentially, for example, would like to buy. And a lot of financial, like for example, banks, they have their ESG questionnaires, which in the end, they cover the same topics and KPIs as rating agencies. So when you do a rating, you can prepare your company to disclose the correct data with high quality and efficiency. And therefore, you also cover what maybe a financial institution would ask you to disclose. And this qualitative disclosure, it can actually lead to higher M&A premiums and valuation multiples, because the reliability of ESG data helps buyers to understand the risks that they're taking in buying a certain company. And it might actually also help them to understand how the company is in line with achieving their own sustainability targets. So all in all, also here quality matters. So it's transparency and high quality ESG data that builds trust and enhances the values of companies. But it's really difficult at the moment still to always understand what is quality of data, because the market is still young and it's getting more clear. And I think the rating agency, what they provide is that they provide you with a structure and a framework to start off with. And once this data is out there, it's also detectable. So companies like EthiFinance, using tools like Briink or other AI-based tools, they can gather the data and have a much easier time to detect the right kind of information. So just as an example, that how we've already looked into Briink is that they use an ESG, one of the tools that they have is an ESG rating gap assessment tool, and it can screen companies, and you can identify the disclosed data very easily and have a first understanding in a kind of a gap assessment to understand how the questions that rating agencies pose are covered. And Marcel will tell you about Briink more in detail in a few minutes. So going to the next slide, to summarize what I've just talked about a little bit more, it's that there's some key learnings that we can take from this, which is that data is supposed to be or should be visible, comparable, recognized, transparent, up-to-date, consistent, and complete. And I've categorized these key learnings into 3 fields to break it down on the next slide. So what is visible data? Visible data is that the data is detectable and accessible, meaning it's disclosure through reports, statements, or your website. The second part is making data comparable, recognized, and transparent. So it's standardization, using recognized frameworks, providing metrics and targets according to those known standards, and potentially get external verification on your data. And lastly, it's consistency, up-to-dateness, and completeness of your data, meaning it's supposed to be traceable. This is something more company internal, having a good governance and accountability system to not only have an efficient collection tool, but to also process a good process for tracking, and that you ideally report in line with your financial reporting cycle to ensure the latest data for your company is always available and always out there. I've brought you on the next slide just 2 examples how you could, on top of your sustainability report, disclose the right kind of information for rating agencies. And it's on the one hand from Porsche, the ESG addendum, which is very story-based. And on the other side, you have EWE, it's a renewable energy company, and they really they publish an ESG fact book, and they really publish a very KPI-based part. And I think this is very interesting to see how you can disclose data and have a full set of data out there without having to put everything in your sustainability report, which in the end is much nicer if it's a little bit leaner. I've also added just some sources, but I think I can already hand over here to Marcel because you can look into that in detail when you get the slides.
Yeah, thank you very much, Katinka. Super interesting insights on how the stakeholders use and perceive the value of ESG ratings. And I will now switch over to the perspective of AI and how AI can empower ESG ratings. And just a short word on Briink, like we're still an early stage startup, but in the space already since 4 years. We're based in Berlin and also in London. And we use AI only to power the ESG domain and ESG space. And we really found out it's all about ESG data, and that's where we can make the most impact. So looking at ESG ratings, we've heard, especially also from Julia, there's 5 steps, but of course there's the methodology you need as a base. But then, like, how do you really do and develop an ESG rating? And there is 3 steps from our perspective that is really important. It's really crucial, and AI can help a lot to empower those steps. First of all, it's gathering all relevant ESG data. And I think that's especially is like the biggest point on that list, because the Briink tool, as I will show you in a second, is a powerful tool to gather all the data, which is the most pain point of all ESG management and analysts and executives, because you have the data somewhere hidden, but you can't really, get it out and compile it to the structure you need. So gathering the data is the first and I think most crucial part where we can help with AI. Second part is, when you have the data, of course, you need to benchmark the data points. You have to come to an industry range of what is a strong performance within an industry, what is a weak performance, what is the middle range. So you have to benchmark all the data within one industry to come to a certain leveling of performance. And then the third part is deriving an overall ESG score for one specific company within that range of industry benchmarking. And all 3 steps can be empowered by AI. And I will show you in a second how this could be done. So Briink has essentially built an agentic AI engine that handles ESG data. And for ESG ratings and especially those 3 steps, it's really a question of data extraction. So where are the ESG data points hidden right now? And they could be hidden in documents, in reports, like annual reports, or like ESG fact books, just as Katinka mentioned. So sometimes companies struggle or ESG rating providers struggle to really get all the data that this is existing and really find it where it is and extract it. So AI can help with that. And we are even capable of extracting data directly from websites or from documents uploaded on websites. So we also use the web a lot to screen and scrape ESG data. Second point is the structuring. So all ESG ratings, and basically, I guess, any ESG frameworks, not only ratings, is based on a questionnaire type of structure. So there's always a set of questions and you're looking for answers. And with this kind of questionnaire logic, you can assess ESG due diligence work, you can go for ESG frameworks, you can, of course, as Katinka also mentioned, have ESG rating providers, methodologies, and their specific questionnaires to really ask for the questions and extract the data points and then come to the answers in a structured way, right? And the third part we can help with using AI is then using analysis tools to really look like, okay, what is the demand? What is the questions? What is the answers available? Is there gaps? Is there data point gaps? Is there performance gaps? And then, of course, we can automate benchmarking, compare companies to each other, and provide a customized scoring methodology to that benchmarking process. And yeah, this can be automated with AI. So basically, these 3 core capabilities are driven by one agentic AI technology set. And this is just the workflow of basically of how it works. So you need input data, that's for sure. It could be internal data as well. So you can either upload internal data or you can get the public data you have published in reports in no matter what types of documents they are. So it could be PDFs, could be PowerPoint, could be websites, could be anything. You just need to compile the input set of documents. Then you can push it through our AI model. And this can be done using a web platform. I will show you some screenshots in a second, or it can be done programmatically through API in the backend. And then, of course, it's always using AI, it's always crucial to really have one human in the loop, one ESG expert in the loop to really look at the results, verify them, and then go for a ESG data set that is reporting ready, or let's say fully ready for a rating and a scoring. Doing this, we score a very high accuracy level of 90% and more. We really have strong impact and time savings, at least 40%. So we always cut manual workflows in half using the time. But sometimes it's really like high scale data usage, sometimes 40x. So it's really, sometimes we cut a 40-hour week of manual analyst work into like 1 hour, and that's like then the 40x. And it's really astonishing what you can do there. And we even score higher data quality because we eliminate human errors during those manual data processes, and it's more accurate and more robust data we get in the end. So it's really also strong in getting higher data quality. As you can see, we have some customers and we're working with EthiFinance for quite some time. So there's very good advantages in use of AI tools for many companies around the ESG space, but of course also for ESG rating providers and consultancies and everyone who's working with ESG rating. So how does it work? And let me just step by step take you through a short tour. It's only 3 or 4 steps. So you have to get the data in our system. So either upload the data or use the web screening to screen the content that is publicly available on a website, on documents, on PDFs, or annual reports, whatever, or the websites themselves, the URL websites. And we can take all that information and then automatically crawl it, screen it for the data points we want to get. And this screening is done in a structured way. So here we go. There's one questionnaire, just a simple one. We just call it ESG performance assessment. They're all similar types. So I'm not highlighting any specific rating methodology here. But the important part is you will always have a set of questions, and you will have certain types of answers that is needed. So sometimes you really want a metric type question. Sometimes you want a short narrative answer. There's multi-select or single select answers you're looking for, and sometimes even rows or tables. So some ESG rating methodologies really provide, like, give me the scope 1, 2, 3 emissions over the last 3 years, and that's kind of a table answer you would need. And the Briink tool is really focused and fine-tuned for that type of ESG framework assessments and questionnaire types. So this is really something I think only we can provide in that specific manner. And when you have inputted the data, when you have your questions and your answer type set, then you see on the top right button that magical AI button. And if you click on it, then we can unlock all the ESG insights with one click. And that's basically the power of AI. And then just to give you an example, when you assess a company, there's just an example of BMW Group. And maybe one question is like, well, did the company disclose any climate risk exposure or conduct climate risk assessment during 2024? And then we screen all the documents automatically with the AI engine. And here you want to have a yes or no answer. So in this case, yes, BMW Group has done it, and you can see it. Oh yeah, it's based on IPCC pathways, and it's really giving you quotes and also the sources, which documents have related to that question. And you can also then, using Briink platform, like click on the sources and really go to the original passages and captions of where this information was disclosed. So this is how we do it in a nutshell. And of course, this type of questionnaire logic can be applied to all major ESG rating frameworks. And we're not working directly with all of them, but EthiFinance is a good example of how you can really use AI and the Briink platform to empower all of those frameworks and logics. And there's two core benefits I would like to highlight in the end. And the first one is really, we have scaled workflow automation by using AI. And of course, this comes with massively saving time and budgets. So AI can really empower, make this work of data gathering, of benchmarking and scoring a lot faster, easier, and also budget saving. So I think that's maybe the biggest point. But there's a second point connected to that, and it goes beyond. We're even capable of optimizing rating results, because sometimes the rating does not really 100% reflect like the ESG performance of your company. Sometimes there is data gaps you could have been able to close, because there is the data somewhere, you were just not able to really find it in time. So using AI, you can really screen all the data available, hidden in some documents from some parts and divisions and units of your company. You can just include those and eliminate data gaps. And of course, as I said, sometimes there's also human errors included in manual data workflows. So AI tools can also eliminate those errors. And in the end, you can get better rating results. And sometimes rating providers also, they come up with their own assessment. They give you some 2 weeks or 3 weeks time to comment on. So you can, with AI tools, use that short window to really check on, is the assessment of the rating provider correct? Is there additional data you might have not disclosed yet or whatever? And then can, with AI, very fast come up with an answer and a correction kind of comment, and maybe improve your rating results based on that. And this, of course, goes for all parties involved. So rating providers themselves can use the tools to produce their ratings and to help with consulting work. And ESG teams of companies can use it. ESG managers can use it to really, get the data they need and like transform the data from one ESG framework to another. And many companies not only do 1 or 2 ratings, they do 3, 4, 5, 6, 7, and sometimes even more than 10. So it's always a question of, do you have the data set, but really the methodologies, the questions differ from ESG rating to ESG rating, and you can then with AI like transform the data in a structured way that is needed. And of course, ESG consultancies can also use the tool and have those benefits in their consulting work, and really get the benefits out of this for their projects, and then also enable companies with better results, get better results. So thank you very much. This was our perspective on how AI can empower ESG ratings. And now we're stepping towards the Q&A session. And I might take the liberty of asking the first question to Julia and also Katinka, because looking ahead, and there's, as you said, Julia, there's a lot of things happening technologically in the AI space. Like, what is your vision of how AI will transform the role and importance of ESG ratings in the upcoming years? And maybe, Julia, that's a good one for you to start, but Katinka, I would also love to hear your perspective. And feel free, the both of you, to have, if you have questions yourself like that, maybe you have the first round we share among us three, and then we switch to the questions from the audience, and we have some 15 minutes left for that session.
Yeah, thanks, Marcel. It's a big question, and to be frank, I think this is, really one of the most. So AI is going to be the most, highly influencing factor to our industry. There are many others, for example, the regulation that I talked about and everything, but the use of AI is really going to, and it's already started, right? I mean, we feel it at EthiFinance, and I mean, what you just explained is, there's a lot of time saving and a lot of efficiency gains, and more to be expected, obviously, because that those tools like Briink, they just keep on getting more efficient over time. So yeah, I mean, we will definitely get to a point where there will be less, on the one hand, less need for human analysis, but especially of a different kind, right? We obviously, you know, are doing even now much more, you know, reviewing of AI-produced data and information than collecting the data ourselves or producing or writing the text ourselves, right? So that's already a big change. So yeah, I mean, I'm not, you know, worried in the sense that AI is going to completely replace ESG ratings, but it's definitely a big sort of revolution that is currently going on.
I think it's super interesting because I do agree in some parts. I think it's also something that I am curious to see in the future is that the more people use AI to create analysis and write texts, the more you also have similar results. Because now having humans, you also, I mean, just alone thinking about writing texts or analyzing things, it's much more subjective. And I'm also curious how that will play out. And I think for consultancies per se in the future, it definitely will support in a lot of things, and it will enhance the workflow in a way that it becomes more efficient, which maybe will also help to reduce the hours that typically consultants have to work. But it's also, I think, very interesting to see that already now there is so much benefit of it, and at the same time, you need to be so careful to use the tool in the correct way. So I think it's going to be a lot about learning how to use the tool in the correct way and still, as Julia said, using the human mind to then detect what's actually the useful aspect of the information that the tool spits out in the end.
And yeah, and maybe I can add something. And there's an interesting question also from Kanchan Mishra from Sustainometric here in the Q&A box that is linked to what I wanted to add. Obviously, there are also costs, right, that are linked to AI, and so, you know, everybody thinks sort of, okay, it's gonna, you know, help us just automate everything, and then we're not gonna have to pay all those analysts anymore and so on. But there is actually a cost linked to you know, tokens and tools and subscriptions to tools such as Briink, for example. But then, so that's not to be forgotten, one, but then another big aspect is the hidden cost linked to AI of energy consumption. And I think for now, you know, there's like, yeah, these are really hidden costs, but they will have to, I mean, at one point explode, right? And the providers of AI solutions are going to, you know, roll them over to users at one point. So AI cannot, you know, long term stay as cheap as it is right now, unless, you know, there is a, you know, an efficiency revolution also in terms of data servers and so on. But you know, it's just like, you know, air traffic cannot stay as cheap as it is right now for the obvious reasons. I think it's the same thing with AI. So, you know, only, you know, thinking that AI is going to be a solution for all kinds of, you know, cost and efficiency problems and questions. I don't think that it's as revolution-esque as we maybe think it could be long term. I don't know if
that's good insights. And I think, well, being an AI company ourselves, like, of course, in the ESG space, of course, there's always the kind of dialectic way of using AI, and of course, its energy consumption for ESG space. But yeah, I mean, maybe similar to cloud computing and cryptocurrencies. Like this is an emergent technological trend, let's say, or like this disruption. So I think AI will be a major development going on globally still, like for the many years to come. And we believe at Briink it should also be used to empower ESG work, and we're exploring the ways it can be applied to that. But of course, right now I also agree, like it's not really solving the puzzle of how humankind will decarbonize in the next 10, 20, 50 years fully just by using AI as a magical tool. No, it's not. So we really have to use the tool for good. But of course, it's not only the tool, and the tool itself, the technology itself won't solve the problem. So it's really the humans of applying technology and how they apply it, right? So it's really, and the energy consumption is really hard, a hard thing. And yeah, of course, they also try to have carbon neutral energy supply, but yeah, I think that's the question to the big LLM providers of how they solve their energy question, and hopefully it will be a way that will not put more carbon into the air, right? Okay, so well, thank you for that. I think we're deeply in the discussion already, but I would like to have the last minutes also a look at the questions from our audience. And there was one question early on, Julia. Maybe you can take this one quickly. Like, is from Selim, like, is ESG rating results depending on the audit and reporting of the company? Like, do you highly rely on the company reports and the audited reports when you do your ESG ratings? And is this, or do you start from scratch and have your own perspective?
Oh, well, no, we don't start from scratch. Obviously, the main input is the company reporting, right? That's actually the starting point, where we collect the raw data from company reporting, and then in a second or so, and come to the question of is the audited report a more reliable source than a non-audited report? So definitely yes. So we do value that in our ratings. And then in a second step at EthiFinance, because a big part of our rating universe is small and mid-cap firms, we also enter into a dialogue with the company, or propose a dialogue to the company so that they can deliver additional information. You know, some of the smaller firms, they do not have a sustainability report, or it's not as detailed. And obviously now with Omnibus, we will have much less reported, mandatory reporting out there, at least in Europe. So we will have to rely again more on the company dialogue to get enough information. I hope that answers at least part of the question.
Yeah, thank you for that. And Katinka, maybe another question to you from Maximilian. Like, he's questioning, is ESG investing really continuing to gain importance? And especially looking at ESG funds of Article 8 and Article 9 as SFDR, like, can you, I mean, we all notice the kind of ESG backlash happening right now across the world, and especially Europe and the US, but can you give us some insights? Maybe the financial world is having a different perspective and behind the scenes kind of really pushing on ESG and sustainable investments. Is this the case?
So I think there's two aspects to it. So one is that the market dynamics itself it's a little bit slower. So if you look at the macroeconomics, generally, like there's been like all funds have been having difficulties, and that also includes, of course, ESG funds. But I think what's really important to also see is that ESG is evolving. So it used to be a very niche product, and it used to be that there are these sustainable funds and they're only doing sustainability aspects, but it's becoming a little bit more normal that it's being implemented into, for example, the general like responsible investing aspect. So financial institutions are integrating ESG criteria under broader concepts. So I think that's a really important aspect. And I think the second part is that financing also goes a little bit more towards transition finance, so financing the decarbonization of hard-to-abate sectors. And of course, this still, I think, Julia, you like with your product of transition finance, you probably also struggled with this a lot. It's really difficult to still find very clear guidances on what transition finance is, and it's really one of the fields, in my opinion, that it's one of the most important, but also the most difficult. And I think this also changes a little bit what sustainable financing means on the market. So I understand, and I think it is visible that there has been a big backlash, but I think companies are just better at hiding a little bit how they still use ESG, because just looking at insurance companies, I think I already mentioned this point before, they're implementing ESG aspects into their insurances much more. And this has a huge effect on companies and what they're choosing or how they're choosing to produce. Because if an insurance doesn't cover anymore your production, like the manufacturing building, because I don't know, like I think maybe you've seen this, like the big pharmaceutical company in the US where the roof flew off in one of the big storms. And if insurance companies, they need to typically cover this. But if they can identify that this is going to be a risk that's going to be more common, they will not cover this anymore. And this alone will already have a huge effect on companies and financing. It's just a little bit more hidden, I would say.
All right, thank you. Yeah, it's all interconnected. We're hitting about time and we have to leave sharp. So just coming to an end, there's many questions also through the Briink platform. We would, of course, like to answer them all, but maybe not in this webinar. But you see on the screen our emails and also a LinkedIn QR code. So if you want, just scan it right now, and you can also scan it later when we send over the slides in 1 or 2 days from now. So thank you very much to Katinka and Julia for this lovely session. Thank you for listening and watching, all of you, and for your good questions. The questions we can, of course, discuss and answer later on as well. Thanks for thinking and putting them up. And yeah, let's keep the conversation going. Thank you very much for this hour. And yeah, goodbye from our side, and hope to keep in touch and talk to you soon.
Thank you so much.
Thank you. Bye-bye.
Bye-bye. Ciao, ciao.
Bye-bye.